Good morning and welcome to today's webinar. We're going to allow just a couple more seconds for anyone remaining to join, and then we will get started. Okay, so we'll get started now. Thank you all for joining again, this webinar in partnership with Nairobi Securities Exchange. My name is Robin Thorpe, and I will be your host for today's session around embracing fixed income automation. Firstly, I would like to introduce our speakers presenting on today's webinar. Mrs. Sheila Umbajiwe, Deputy Governor, Central Bank of Kenya. Mr. John George, Global Head, FICC Trading Solutions, London Stock Exchange Group. Mr. Jeffrey Azuno, Chief Executive, Nairobi Securities Exchange. Wycliffe Shamia, CEO, Capital Markets Authority. Peter Matuku, Central Bank Proposition, Refinitiv. David Wanaya, Chief Operating Officer, Nairobi Securities Exchange. A warm welcome to you all and thank you for joining us today. During today's webinar, we will discuss fixed income and global landscapes and the development of Kenya's debt market infrastructure, followed by remarks from the CMA and Central Bank of Kenya. Before I hand over to our first speaker, I would like to run through some webinar housekeeping. On your screen, there is a toolbar where you will be able to access webinar materials, speaker info, and any technical support needed. Please also share your thoughts and feedback using the survey available. Lastly, please remember to submit any questions via the Q&A box, and we will aim to address these at the end of the session. Now I would like to hand over to our first speaker, John George. Welcome, John.
Thank you, Robin. Okay, thank you very much. So we have a packed hour ahead of us, so I'll crack straight on. So around the theme of embracing fixed income automation, I think it'd be useful just to take a step back, have an overview of the international bond markets, themes, challenges, and the evolving landscape. And this is a big space. We have $130 trillion worth of bonds outstanding globally. In emerging markets alone, over the past 20 years, there's been around $40 trillion worth of sovereign issuance, and almost 3/4 of that came since the 2008 financial crisis. The share of sub-Saharan African bond issuance has quadrupled since 2000. If we look closer to in 2020 in emerging markets, global EM supply, both local and hard currency, was around $4 trillion. That's up 20% year on year. And after that initial spike in yields with the onset of COVID last year, we've fully recovered, thankfully, those 400 basis points we saw spike out. So this historic substantial increase in emerging market supply has clearly been a response to new demand. So what's driving this and what are the trends we're seeing? Well, certainly one of the big drivers recently has been quantitative easing. In 2020 alone, we saw $6 trillion worth of global QE. That's more than half the cumulative global QE between 2009 and 2018. So it's a staggering figure. Looking at last year, the Fed's balance sheet, in March of last year, it stood at $4.3 trillion. 8 months later in November, $7.2 trillion. If we look at the impact of this, we're clearly in a negative yield environment. We have been for a while. The volume of negative yielding bonds stands at a staggering $18 trillion. And 27% of the world's investment grade debt is sub-zero. So clearly forward-looking inflation expectations from market participants have been mainly benign. Central banks have been seen unlikely to raise policy rates. So investors have responded to this, and there's been a grab for yield. And specifically moving to duration as well, we've seen, interestingly, 30, 40, 50-year duration issuance out of Saudi Arabia, Mexico, Indonesia, Chile, just to name a few. In the regulatory arena, we continue to have big changes. IBOR transition globally is impacting some $300 trillion worth of financial assets. We have in Europe ongoing evolution of the transparency regime in fixed income markets around MiFID II. And we have Basel III with requirements around capital adequacy, stress testing, and market liquidity risk. In technology, certainly I think COVID has been a catalyst for digitization, and it's served as a litmus test for participants' digital infrastructure. So big themes around AI, big data, advanced analytics, cognitive computing, digital connectivity through APIs. These are all now part of the mainstream, and they're all around removing the friction from that customer journey and experience. Banks, I think, have had particular focus on RegTech, around reporting, data quality, and surveillance. And there's an ongoing discussion around efficiency. We've had reduced market volatility, a lot of people working from home in the past year, and a lot of people realize that they require less people and they want more automation. If we look at the market structure, certainly I think the digital push is now entering the mainstream. If we look in investment grade and high yield markets within credit, the volume of business going electronically is up 15 percentage points in 2 years. So it's almost 40% in investment grade bonds now and around a quarter in high yield. And similarly, if we look in the rate space, that's around 50%, and many people expect that to hit 65 or 70% by the end of next year. And certainly, I think electronic trading has been encouraged by the expansion of new products such as ETFs, which is getting compounded by a shift to working from home. And if we look at the vertical, we look at primary markets, we have digital auctions, electronic book building. So I think this is a train that will continue to move forward. Over to the next slide, please. Thank you. So the key challenges in fixed income, I think we've got 4 broad themes here that will always be around, to be frank. Around transparency, both pre and post trades. Certainly in Europe, the EU has tried to address this through MiFID, with increased visibility on pre and post trade pricing and standardization of disclosure. However, illiquid instruments continue to be hard to price. And we've seen challenges historically. We go back to Argentina, the default 2 to 3 years ago, bid asks were 4 points there, and it was very difficult to gauge where the market was. Certainly global regulators, I think, are increasingly requiring more detailed disclosure and stricter risk management around this. Around price discovery, I think the problem is well illustrated, actually, if you look in the ETF space, interestingly enough. In March of last year, it was reported some of the biggest corporate bond ETFs were trading at discounts of 5% to their NAV. And the problem's actually lied with the underlying fixed income market and how it arrives at prices. Bonds are traded OTC, they're based on theoretical bond prices, which could be stale. And if you go back to March, there was some $720 billion worth of ETFs trading, but without any trades in the underlying bond market. So ETFs are actually providing an element of price discovery that was actually lacking in the underlying market. When we come to liquidity, what is the view of true liquidity in the market? And it continues to be a challenge, I think, for anyone trading this space. There's clearly a correlation between executable liquidity and price transparency, but it's actually negative past a certain point. If you have too much transparency in certain liquid instruments, you could impede execution. And ESMA has done a lot of work around this in Europe as part of their MiFID regime. When it comes to standardization, pre-trade, post-trade, and execution data, they're still silos, I think, in many cases, and fragmentation causes significant operational risks for many people. Moving on to the next slide, please. Get there eventually. There we go. So looking ahead in fixed income, I think compliance demands will continue to increase. I was reading over the last 10 years that the trade surveillance technology market has actually grown 13% year on year, and I think that will probably continue for a while. Around electronification, certainly more and more buy-side investors and asset managers are outsourcing their trading functions to electronic specialists. And the expectation is those E ratios I mentioned will continue to increase. And certainly I think this brings to the fore, and the seminar today, electronic workflow solutions will expand and continue to be very important and relevant. So on that note, I think I've hit my 8 or so minutes. So thank you, and I'll hand over to the next speaker and enjoy the seminar.
Thank you, John. Next, I would like to welcome both Jeffrey Azuno and David Wanaya, presenting on Kenya's debt market infrastructure. Welcome.
Good morning. Thank you very much for hosting this event. First of all, I'd like to recognize our key speakers today. John George was giving us a very nice synopsis of the global financial markets and how the markets have evolved and what role our markets, especially the frontier markets, are playing in this. And also our Deputy Governor, who's going to be speaking after me, for really sparing her time to be one of our keynote speakers here today. So if you move to the next slide, our role here is to really share what has been our Kenyan experience, and how our bond markets evolved over the time, and how have the electronic trading platforms been helpful to this. So it's really been about trying to achieve a strategic alignment for us in our country, because the bond market has a significant place in our financial markets, and hence today it constitutes about 26% of our GDP, and hence that speaks to really why we have to continuously invest in the bond market to ensure that we're able to also support the growth and the development of our country. Maybe you can move to the next slide. So in the next slide, if you can move, it's just to give you a clear picture of where we are going as an exchange. We have a very clear strategic direction that aspires to position us as a leading exchange in the region, and also a partner with other global exchange. And we're driving our bond market agenda under our sustainable business growth pillar, which is really delivering that. And to deliver on that, we have the operational excellence, where we're trying to provide platforms and operational frameworks that aim and improve and grow our markets. It's very critical for us. And then we're also very clear about strategic partnerships, and we're happy that this arrangement we have with the LSEG is one of those key agendas that we have, and you'll see a bit more that we'll do together with other partner exchanges, both in Africa and can move to the next slide. So in the next slide, this is just a picture of the NSE. We are just highlighting that today our bond market is 26% of our GDP, but if you aggregate this with our equity market, the total value of tradable volume of securities is about 50% of GDP. And this just enhances the importance of what capital markets, the role that we play in the country, and also developing and providing new products and really broadening this as a key segment of the economy. Strong affiliations with other partner exchanges, and strengthening ourselves on a continuous basis, and just to provide a highlight of why we are taking this initiative extremely seriously. Move on to the next slide. So in the next slide, if you can move on. So we decided to provide a picture of where has the bond market come from and where are we today. So up to 2009, our market was 100% manual, where trading once all execution was done on a bilateral and manual basis. And up to 2009 is when we were able to achieve a level of automation, following the automation of the equity market. And that's when we were able to bring in an electronic trading system. And you can see the spike in 2010 after that achievement. And also that continued because we also went ahead and dematerialized the securities, and hence more and more volume was traded. And so the trend continued high. As you can see, the orange bars, which basically is the bond market, and it compares that with the blue bars, which are the equity market. And the trend has actually been on a northern trajectory up to last year, where we achieved our highest trading levels of $6.98 billion in terms of trading volume. And very significant, and I'll be explaining some of the milestones that we've achieved with that. So the electronic trading platform has been very helpful in enhancing efficiency, more transparency in terms of the price discovery, and a lot of these. So I think the evolution we're going to now with this partnership with Refinitiv will even enhance this further, and we project that we'll see even better trading volumes. It has also helped us build a very stable yield curve, as you can see on the next on the slides on your right. And with this, we're able then to provide better price mechanisms, and also we've been able to help the central bank to develop a very clear debt issuance program. And today, I'm proud to say that we've seen the lengthening of our maturities from a national level, and also the treasury bills to treasury bonds have also been, the rebalancing is taking place well. And I think all this is attributable to a very active and stable secondary market. And I think this automation has been very, very helpful. So these are two of the key achievements that we've seen that has come up because of the electronic trading platform, and be very, very helpful. Then move on to the next slide. So our next slide captures the milestones of the bond market. As I said earlier, in 2009 is when we automated the market. We were able to reduce the trading cycle from 10 days, settlement cycles from 10 days to 3 days through automation. In 2012, we were then able to partner again with the LSE, the FTSE NSE Kenya Shilling Government Bond Index, that provided a benchmark for pricing, and that has been very good in terms of helping us with the issuance of securities. In 2009, we were able then to reduce the trading cycles and introduce three cycles in a day, and that has been very helpful again in helping the active and efficient trading. And then now in 2021, and I think this deputy governor will be speaking to this, there's a project towards changing the CSD at the central bank, and I believe this will also help provide better efficiency into the future, and even bring in more clients and more electronic trading connectivity to the market. And we're very, very helpful to be partners in this project, and this Refinitiv partnership coming ahead of that will help us to really improve that and make sure that the future integration will be highly seamless. You can move to the next slide. So some of the challenges and what some of the suggestions we have, for instance, to grow our markets, is to have a regular issuance program. I'm glad to say that the central bank has been very clear about this. We've seen a very, very predictable program coming through. We want to encourage them to continue with this because it's becoming the bond market is becoming quite robust. We're seeing a lot of pools of capital coming in now, especially the retail, who are getting more and more interested in government bonds. So this regular issuance program is quite helpful. The regulatory environment has been very encouraging. I think we've seen greater pools of capital coming out, especially the collective investment schemes, the pension funds, and more regulation that can be favorable to the market can be helpful, and we want to encourage that as well. Transparency is one area that we continuously have to work on, and I think this is one step in that direction. We need to increase trading and operational efficiency as the markets become more and more transparent, and we want to encourage that as well. Liquidity for us is very critical. We think liquidity is one area that we must continuously ensure that the benchmarks are very clear and can be better priced on. The long-dated, the plan to continuously improve our duration is one area that we want to encourage, because in our view, we believe that fiscal policy must be supported by a very clear monetary policy. And I think this is the direction we're trying to take with improving the duration, trying to manage the yield curve and all this. I think these are very, very clear ways to help us grow our market. And finally, provision of more liquidity enhancers. And I think our regulator is going to be very clear about the direction they're taking on primary dealership, market making, which I believe are going to be very helpful in helping deepen the pool and provide more attraction to investors, especially when they're clear about clear exits through secondary trading. Can move to the next slide. So the next slide, please. So my final slide, I think, speaks to the benefits of this particular project that we have today. And as we try to go there, just want to, yes, here we are. So we believe that this project today will help us achieve increased access points and improve our global exposure. We think that we already have a very well developed market, but I think we want to enhance the efficiency and the openness of this market, and we believe that by giving this front-end ability to all investors, it will be very, very helpful. We believe that there will be a high level of seamless trading on our fixed income securities, better price discovery, the ability for our investors to have sight of their bids and pricing will be very, very helpful. More transparency will be put onto this program. We're happy that despite giving that accessibility to our investors, all our intermediaries will still have a role in this platform. Because all execution will still happen through the brokers who will have to validate all the intermediaries, who will have to validate the trades before they're executed. So their role is still very clear. But that ability to provide sight of the transaction is what we want to achieve. And even the communication through the chat is going to be very, very helpful. And so we believe this, coupled up with the initiatives that we're trying to do around primary dealership, around enhancing our yield curve and the CSD, is going to be very progressive for the market. And we're very, very happy that we've taken this step in this direction. So I want to once again thank Refinitiv for picking on us. This is the first, I'm advised we are the first exchange to go in this direction in Africa. And we believe we provide a learning for our other partner exchanges on the continent. So thank you once again, and I look forward to further conversations on this subject. Thank you very much.
Thank you, Jeffrey. I would now like to welcome Wycliffe Shamia to give his remarks.
Okay, thank you. My name is Luke Bombara, Director Policy at CMA. I'm standing in for Mr. Wycliffe Shamia. Please accept his apologies. He's attending a similarly important but prior confirmed engagement. To the DG CBK, NSE CEO, and also senior representatives from the London Stock Exchange Group and Refinitiv, all protocols observed. I know I only have 5 minutes, so I'll try and deliver his speech off the cuff. Hopefully I will not misrepresent him. I wish to take this opportunity to congratulate the NSE for this initiative aimed at deepening the fixed income securities market in Kenya. The initiative being launched today has been preceded, as we know, by several months of hard work by both the NSE and its technology partner, Refinitiv. We note that the platform being launched today integrates the NSE's bond trading system with Refinitiv's Eikon Fixed Income Callouts platform, a system that seeks to introduce a higher level of efficiency in pre-trade phase of the bond market transaction cycle. We note this platform seeks to bring several benefits, but the ones that stand out that I'll mention is probably the pre-trade transparency by providing for single board for quoting positions with multiple counterparties, And we note that the level of integration is expected to considerably reduce the time needed as well as minimize errors by introducing straight-through processing of transaction. And ultimately, we see enhanced liquidity in the government bond market. But just a step back, the enhanced market infrastructure that we are celebrating today aligns well with bond market reforms as outlined in the Capital Markets Master Plan 2014-2023, which itself highlights the creation of a dynamic and liquid bond market underpinned by standard financial market infrastructure, strong and independent supervision as a major requirement in achieving its objectives, and thus the recommendations for the implementation of a hybrid bond market in Kenya. But what is the state of the bonds market in Kenya? Very, very briefly, it's still dominated by government paper, both at primary and secondary market level. Treasury bonds actually comprise 99.83% of the total turnover as recorded in 2020. And also 90% of all the outstanding, that's a combination of T-bonds and corporate bonds, actually are concentrated on T-bonds. We also have witnessed corporate holding by locals at about 95.18%, meaning local bond holders, that's the retail bond holders holding about 6.18%. I think Jeff talked about historical highs. I think we had the highest turnover of bonds in 2020 of 691 billion shillings. So it's if you look at even the level of liquidity compared to frontier and emerging markets, it's fairly modest at 32%. That's the turnover ratio. And we also note that main investors still remain commercial banks and fund managers, but we've seen an increase in participation by retail investors lately, as well as insurance companies. We also have several credit rating agencies licensed by the CMA. And lastly, because I'd be very brief about this, is really the emergence of debt crowdfunding platforms in Kenya lately. I think we are all familiar with Emakiba and Pezesha. So what is really still outstanding is primary dealership. We are aware there were guidelines for government security market makers through the Bond Market Steering Committee from 2011, but we are yet to really get sufficient traction on the same. And one of the issues that still penned, and I must say we are still really engaging with the relevant stakeholders to try and unlock that, is insolvency netting and settlement finality carve-outs, which, of course, as you're aware, would really affect the efficacy of securities lending and borrowing, as well as outright collateral transfer, which would be a prerequisite for achievement of true repos. The authority welcomes initiatives by the CBK, the National Treasury, and the Bond Market Steering Committee over the years. Particularly CBK, we credit for introduction of benchmark bonds. I think lengthening of maturity of bonds up to 30 years. We've seen bond reopenings, reduction of minimum subscription of treasury bonds for retail investors to 10,000 shillings from 100,000, and the introduction of the horizontal repo market. Most recently, we've seen efforts towards automating bond auctions, and most recently, the implementation of the new state-of-art central securities depository. As I conclude, maybe I'll just talk about the support we've received from the National Treasury. There have been a raft of tax incentives granted over the years, the most prominent one being the exemption of bondholders from withholding tax on interest income on bonds whose proceeds are applied towards infrastructure and green financing. Securities lending and borrowing regulations were gazetted in 2018, And refinements on the regulatory framework will be informed by the testing that's going on the CDS screen-based fintech platform. On the regulatory front, we've had Section 31 of the Capital Markets Act amended to allow over-the-counter trading. And we are now working with the National Treasury, CBK, and other strategic partners towards developing the requisite bespoke regulations that basically outline the criteria for participating in such a platform, the market organizer and the accountability of such an organizer, disclosure requirements, as well as detailed technical platform specifications. The platform we are launching today complements new infrastructure being implemented by the CBK, as I've said, and similar ones that will come in future towards a more seamless trading experience for our investors in the bonds market, both locally and internationally. In conclusion, and I'll quote unquote my CEO, I urge the NSE and its technology partners to continuously develop this platform to ensure that seamless user experience and automation of the remaining linkages such as ensures remaining linkages with commercial banks towards greater efficiency in the bond markets. I also urge the NSE to upscale its monitoring of trading activity towards ensuring trading on the new platforms continue to maintain the principles of fair and efficient markets. Thank you.
Thank you, Luke, and thank you for sending in on behalf of Wycliffe at such short notice. Moving on, we now have remarks from Sheila Mbajiwe, Deputy Governor, Central Bank of Kenya.
Good morning, everyone. Nice to be here. I want to recognize my fellow regulators, speakers, CEO of the NSE, and also participants and market stakeholders. I think it's very important that we have these types of sessions when we're launching new products. In particular, I was thinking about M-Pesa, and I was thinking that with the African markets, it's very important that we don't just copy. If we copy, we'll remain imitators. In order to take leadership and to grow, then we have to also innovate and be those innovators in the market. So as we go forward, I'm always happy to see when we're doing something different and something new, in order for us to take a leadership role and also to protect and grow our markets in the way we want to. Firstly, as a regulator and as the Central Bank of Kenya, we have huge focus on technology. We believe that automation brings speed, accuracy, transparency, quantum, real-time surveillance, and that you can't really beat it. The new world is all about technology, and if you're not aligned to that reality, then as you go forward, you will experience a lot of problems. I think we also have to be careful about the promise of automation, because automation has made a lot of promises that it can't stand by. Unhackable. I remember a lot of discussions about my phone, the iPhone is unhackable. A lot of discussions about the abilities and the securities around the various functions on these phones. And yet we find that's not true. So as we move forward, I think that the technology companies need to be careful about what we say about the products, so that we are actually being realistic about what they're able to do. And I return to my original point, is that the Central Bank of Kenya is a real believer in technology. Also, after the caution on the promises of technology, I would also like to put on the table cybercrime. Kenya being a digital leader and a digital currency leader, we've seen a huge pickup in cyber attacks in the country. And this has to be recognized. So when you are introducing new products, you must also walk hand in hand with the necessary technology to secure the products that are being brought in. I think in the period of the COVID, we are up of 100% on cyber attacks within the country. Then to talk about this product, which is the fixed income call-out platforms. Firstly, it's dealing with our large institutions, the banks, the investment banks, the fund managers, and the insurance companies, which is good because we are starting the product with tried and tested institutions that have the capability and the structure to manage new products as they come to market. And I have to also recognize Jeff Odondo. In the time he's been at the Nairobi Securities Exchange, he's been very innovative and very outgoing, and we encourage him and stand beside him as he continues to do this, and as he achieves the deepening of our capital markets, which is what we're looking for. So again, Jeff, well done for bringing a new product to market. I think if I then move to government debt is under the management, the control of the central bank, and I'm talking specifically the domestic bond market under the control of the central bank, and we work hand in hand with the National Treasury in this respect. And when I look at market behaviors, it worries me. I think in our nascent markets that are still coming up to speed with the necessary international and global standards, we need to be more careful. And I think market behaviors, adherence to the laws and the laid down standards and recordings of those standards and making sure the adherence to those standards is very, very important. Central Bank of Kenya is working very, very closely with BIS, the Bank of International Settlements, to ensure that the global standards that we see in other countries are actually being replicated across our markets. As the audience would know, the central banks in every country, your key mandate is the stability of the financial sector. And so it's very important that we get correct behavior in our markets. And I think if we look externally and we see the bad behaviors that have occurred in many, many markets over the years, I think since 2007, when we saw the impact of the global financial crisis, and we haven't really seen the correct ramifications to ensure that those bad behaviors will not continue into the future. There is still work to be done. I'm actually currently reading a book called Lights Out, which is about how General Motors collapsed. And if you read that, you see why I have these real concerns about market behaviors. Market dominance is another thing that is a problem in markets of our size. Because our markets are small, it is easy for a big player to come in and significantly push the direction of the market to the point that you would also say that there's some kind of manipulation in the process. And, you know, I would also say driving segmentation in the process. When we talk about our liquidity market, we know that there's segmentation that is present in those markets and is part of the reason why the Central Bank of Kenya is bringing in its own central securities depository, a new modern updated one, to help overcome some of these segmentation issues. We've got market development, and obviously this new product is part of what we were looking for, new market development, new market deepening. But at the same time, are we spending enough time with skills and training? Are we spending enough time with careers and remuneration? And perhaps on this, I'm directing myself at my banks to say to them, they must make sure that they develop their staff so that their staff have the capacity to manage these structures. Good communications, which I think is, and I thank Jeff again for his kind words about the central bank. I thank this Capital Markets Authority. Kenya at the moment has good communications between the markets, and we continually have these discussions because that's the only way to really develop the market. As much as the regulators are very concerned about stability issues, are really very concerned about behavioral issues, they're not the institutions that can drive innovation. And therefore, we have to work with our commercial players, our stock exchanges, in order to drive that innovation. Finally, I'd like to just make a few remarks about a new project that we're bringing out. And this is being brought out by the National Treasury, the Nairobi Securities Exchange, the CMA, the Capital Markets Authority of Kenya, and working with the World Bank and other central banks. And Kenya is introducing a new central securities depository we're delighted. We started working on it in 2019, and we should be complete in 2021, June. It is a huge project because it involves many institutions, and in itself, it involves a lot of new technology and new structures that have to come into our financial markets. But it really, we were very glad that in 2020, this system was voted the best central bank settlement system in the world globally. And if you go onto the BIS website, you can see more details about the system. So as I say, we were working very closely with all parties on this. I'm very happy to say that we're on target, and we thank the World Bank for their support in what we're doing on this. So finally, just to say, I wish Nairobi Securities Exchange every success, and congratulations for launching this new project. And we also thank Refinitiv for calling this webinar. Thank you very much indeed.
Thank you, Sheila. I would now like to pass over to Refinitiv for a workflow demo.
Thank you very much, Robin. I want to firstly acknowledge our distinguished guests that have presented. I want to thank Central Bank, Sheila, Deputy Governor, Jeff Odundo, CEO, and of course, Luke Umbera for representing the CMA. I also want to acknowledge our partners and of course, the key stakeholders that are present. So now we want to briefly take a look at the Fixed Income Callouts application from Refinitiv, also known as FICO in short. So as you can see from this slide here, the platform and application sits inside our Eikon information system. The way it is designed, it helps because it's integrated. It helps with price discovery and market liquidity. And again, it also assists traders in trading because it follows the current existing dealing workflow that a lot of our traders are used to at the moment. The way the system is designed, it means that certainty of execution is always guaranteed. And this is because both buyer and seller must confirm, mutually agree on a transaction. So there is no way that one party will claim the deal was at this rate or this other rate. It ensures that both parties agree in order to execute. Also, as we mentioned earlier on, when it comes to price discovery, the system embeds within itself an exhaust mechanism. So what do we mean by this? Well, it allows the trades that have been done over the platform that flow into the NSE system and eventually into the CSD. It allows these trades and details from these trades, i.e. the volume, the rate that was traded, to flow into a real-time market data output that allows participants in the bond market to be able to see in real time where this bond is traded or quoted or contributed from the market. So allowing full visibility to anybody who is interested in participating in a trade. And then, of course, access to trade history is very important for every single trader. Currently with the manual system, somebody would have to fumble through emails and papers, but now it's all centralized, and within the click of a button, history on all trades can be pulled out, extracted, including audit trails that can be forwarded to the relevant parties. And then, of course, there is the post-trade piece, which everybody appreciates. And this is through our Fix gateway. And this just simply means the reduction of errors. So when the trade is concluded, exactly what was agreed and traded on is what will flow into the Nairobi Securities Exchange and into the CSD, and also ultimately into the client's front office systems, should they want to automate that. So briefly, how does the platform work? Well, it follows 4 stages. You select a counterparty, you negotiate with the counterparty, you confirm with the counterparty, and then the post-trade settlement follows. So now let's move on to the demo and see how this complete workflow works. So as you can see, this is the Eikon information platform where the trading application, Fixed Income Callouts, sits within. A trader is able to access it by going to the menu option at the top of the screen and scrolling down to the application and selecting that. Once they do that, they can now go to and create a workspace where they will have 3 windows such as these. The first window is the call out window. The second window is where the trading and negotiations will happen. And the third window is the blotter, where any trades that are concluded flow into. So how does a trader initiate a call? Well, what they do is select the new call out button that is over there, and then the system will automatically open up this box. Inside there, they will key in the identity of the paper they want to trade. So in this case, it's an FXD, so a standard bond, and it's the 1/12/20 issue. Once they key that in, the system does provide a prompt. They're able to select that, and then automatically that bond will be loaded into the trading window. Once at the trading window, the system does allow them to do either a bilateral, 1-to-1 trade, or a multilateral trade. In this particular case, we shall opt for the multilateral. They're also able to select whether they're buying, selling, or looking for a two-way quote. For the demo, we shall stay with the sell option. Over here, they're able to select the counterparty that they want to trade with. So in this case, I will select AB, and I will select bank AC. Once I do that, I put in the amount that I want to trade. So let's make this 120 million, and make this also 120 million likewise. Once I do that, the next step for the trader is to select the broker that they're going to push the trade through. So I will select 02 for both instances. And then now I will be able to key in my CSD, or the CSD that this transaction will finally settle in. So in that case, for me, this is the CSD that I will use for my testing. Once I do that, the submit button is now available, and I'm able to send the trade to my counterparty. So that's what I'm doing now, sending it through. And now the system will tell me that I have sent out a call to 2 counterparties, and they will pick and price me. While I'm waiting for the price, or even before I make the call out, I am able to take advantage of the bond calculator that is connected to the specific paper that I'm trading, and I can use this to simulate certain scenarios for the yields that I may get, and analyze that from my side. I'm also able to access any contributions that have been made or evaluations to get an indicative market price. If I scroll down, I can see that already I have one trade that has come through from the trader, and the second one has just come through. So now, based on this, I'm able to see that the system automatically highlights the best trade. So because it knows I'm looking to sell, the lower yield is the best trade. If I wish, I can negotiate on this by changing this and entering my comments, and the back and forth can continue until we arrive at a price we're comfortable with. For now, I will just select I sell. I'm happy with that price, and the deal is concluded. Once done, it will indicate that I have sold, and it will change color, as you can see, to a white background. With regards to this trade, I can come in here now and I can quickly update my counterparty that I'm doing nothing for now and thank them for this particular transaction. So now the trade, once cancelled, indicates the same to the counterparty, and they now know that no trade has happened at this particular stage. I'm able to come in and view the audit of that particular transaction, and I'm able to see keystroke by keystroke for the entire transaction. I can send this to Excel if I wish to, for forwarding to any other department within the institution. I'm also able to see the ticket for this particular transaction, and I can print it or send it via email to the back office for settlement, or send it to the broker for their own personal reference. The ticket indicates that it was a multilateral trade. I called two banks and I traded with this bank, which is highlighted, and this was the best price, and this is the difference between the best price and what else I was quoted. So again, it provides full transparency to the bank and its settlement team. Once that is done, the trade flows into the blotter, as you can see here, and it is recorded in there. I can now close this transaction and proceed to the next. So, as you can see, this has popped up on my screen. So this is now how it looks if Bank AB calls me. So I just select the ready to pick up. It will automatically open and populate the details over here. Under this scenario, we shall assume that we'd had already agreed, maybe over the phone, with Bank AB, and all I need to do is just confirm that everything is okay. Should I find something out, I can always change it and just let them know. Next, I will choose the broker I wish to go through, select the CSD account that I wish to trade through. Then, once all of this is done, I am able to select the I buy button. Obviously, on the other side, the trader will see I sell. From my side, I will see I buy. So the system always shows the perspective of the trader. So once I select that, the trade is concluded. It indicates it has been bought, and it flows into the blotter once again, and then I'm able to print or see any of the audit trails for this transaction. The final workflow is that of a trade that has been negotiated by a broker. So in this particular situation, a broker has probably been given an order by a bank, and they've gone around and they finally found a counterparty for the bank. The broker lets both parties know who the counterparty is for that particular transaction, and now both parties know who they are trading with, they are able to come and enter the trade. So under such a scenario, they would use the confirmed button. And what this confirmed transaction allows them to do is to be able to key in the details of the transaction. So again, let's say this is 90 million. We have agreed a yield of, let's say, 11.35. And this is a transaction that was initiated and completed by the broker. I select the broker that I have used. Of course, the other counterparty in this particular situation, if they share the broker, they would select the same broker. I put in the CSD account that the settlement will go through. I confirm that the dirty price, the accrued amount, the total proceeds, everything is correct. Value date. Once I'm happy with that, I submit the trade. It goes across to the counterparty who the broker matched me with. They pick it up. They are able to have a look at it. If they're happy with the details and everything conforms to what they expect, they conclude the trade. And the trade, as before, indicates it has been sold. Background changes, and I get the ability to print the ticket. So as you can see, they've confirmed here that all is good, concluded the trade, and everything is done. Once again, it has flowed into my blotter here, and I can see that that was a successful transaction. I can now close that. So that is the trading avenue. So what comes post-trade? What happens after this? Well, immediately, within a few seconds of this transaction going through, the trader will get an email notification that looks like this. And it will tell the trader that the trade that they've conducted, again, all the details for that particular transaction, including the broker and the CSD, has been submitted to the NSE successfully and is pending broker approval. At this point, they can share this with the broker, share this with their back office, depending on what they do as part of their process. Once the broker gets it, sees it, ensures that the funds have been availed, everything is correct, then the broker authorizes the trade to proceed and to be matched. Once that is done, an email similar to this will be sent again by the NSE saying that the trade was reported, accepted, and successfully matched, and then again give details of that transaction. Once that is done, it will flow into the back end and into the CSD for ultimate settlement at the central bank. So that basically shows you the post-trade where they're able to use the platform for price discovery. The trade where they can request for multiple quotes, either through a bilateral trade, or they're able to confirm a broker-initiated trade as a bilateral trade using the system. Of course, there is the other part, and that is the trader's leg. The system, using FIX protocol, is able to plug into the trader's own front office or back office platforms and ensure that the same details that have been sent to the NSE for settlement are the same details that flow into the trader's front office system. That way, we ensure that the full end-to-end process, so the settlement, both external and internal, has been fully automated. So that is a brief overview of the trading platform, which we call Fixed Income Callouts, or FICO in short. Great. Thank you very much for that. Now we want to quickly have a look at this slide that summarizes what we've just seen and what we've been discussing from a pre-trade avenue, the ability to see and understand where market prices are. Then the ability to negotiate either with a multilateral environment or a bilateral environment. And then the post-trade, where the same trade, once confirmed, is pushed straight into the NSE platform and eventually into the CSD on the one end, and of course into the bank or asset manager's own proprietary systems on the other end. And really the benefit of this, as we can see here, is of course avoiding costly duplications. That is often an error, human error that comes up, especially when things have to be keyed in again and again manually. And of course, it's the speed, ability to capture and to process data quicker. And of course, the ability to generate reports quickly, accurately, and efficiently. So we want to really appreciate your time in looking and joining us and seeing this demo and the presentation. And now I want to hand over back to Robbie.
Thank you, Peter. Okay, so unfortunately, guys, we're not going to have time for a Q&A today as we are already over time. But I want to say a huge thank you to everyone that joined us today. And any questions that didn't get addressed, we will be addressing these post-webinar. Finally, a huge thank you to our partners, Nairobi Securities Exchange, as well as our speakers for your participation today. Oh, sorry, I've just closed the webinar when actually we actually have one more. Sorry about that.
Sorry, I think we're having some technical difficulties. David, are you still on the line? Could you go ahead?
Yes, sure. Mine is very simple, just to ride on the previous protocols in the interest of time, and really to confirm that what Peter has just demoed here is something that from an exchange point of view, we have tested. To the deputy governor's point around the security, we confirm that we have put in measures on the exchange side to ensure that there will be no, vulnerability from the broker once the trade is pushed to us. Again, I want to confirm that we shall continue settling at the Central Bank of Kenya. The interface is ready. So this solution that has been played up here is live. It's working, and whoever wants to engage from any quarter, either from the buy side, from the bank side of things, or from the sell side, be it a broker or an authorized securities dealer, we are very, very happy to support as we engage into the next step. So thank you very much, and looking forward to work with the industry. Thank you very much. Back to you, Robin.
Thanks, David. Sorry, I think Robin is having some technical difficulty with her connection. I'd really just like to thank our esteemed guests for their participation, Central Bank of Kenya, Capital Markets Authority, and the NSE, obviously, who are our strategic partners in this. And we'd really like to thank the audience for attending live. We will share this recording and the presentation slides via email. We thank everybody for taking the time out to do this event, and we really appreciate everyone's feedback and support. And Thank you very much. Goodbye.